All right, and we are live back again with the end of day PulseWave report of yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, jumping right into things. We're not going to keep you long. All right, starting with Twitter here. You can see that we came into today with the rally alert buy signal that we got. And then we got that immediate upside production. So right now, it's looking like the bulls are defending the support area, overhead trend line resistance back above, back around the $60 mark is the initial target. Also, there's a gap that you can see here that needs to be filled that was created on October the 27th. So we should get back to around the $60 range. I think that's what this rally alert buy signal will get you. Will the market continue to head down right after that? Very strong possibility. You are in a very steep, very deep corrective zone right now. And not only are you in a corrective phase, but you're also in the red zone. So you're in a bear market on the daily chart on this particular one. All right. Oh, thanks, man. Not showing my screen. My bad. My bad. I tend to do that a lot, don't I? Okay, so as I was saying, this right here, October the 27th, created a gap down. All right, so I think on this particular phase, the bulls are defending the support, taking the market back up toward the overhead trend line resistance around the $60 mark, which is also where your gap needs to be filled as well. So that's my analysis on the Twitter. All right, next up, let's take a look. I wanted to show you what the dollar has been doing. Here's your US dollar. All right, so even though you had a little bit of bullishness up into the, deeper into the 94 handle, the bears took it right back down. The bears have this market still in check, even though the complexion has changed from a distribution now to an accumulation phase. The bears are keeping this one pretty tame, even though you're in the green zone. So, got to watch for this one. We could come back down here to trend line support like it did back here and test the market, maybe get another technical bounce. I don't know. But right now, the momentum seems to be flat. Every time the market tries to get a little rally going, the bears come in and beat it right back down again. Now, the odd thing, reason why I wanted to show you that is because, as you know, as goes the dollar, that puts either pressure or lack thereof on your commodities as well. And that is a very big deal. Check out crude oil. All right, so crude oil today on the futures, you had this rally, more upside production from the rally alert buy signal just a few days ago. Market's giving you a lot of upside production. You're out of the distribution phase. Now you're into the accumulation phase and you are in the green zone. So this one's been up, and away, even though the dollar's been, maintaining somewhat of strength right now. I mean, a dollar above 90 is a strong dollar, and a dollar above 93, getting into that 94 handle, is definitely a strong weight. If you look at nat gas has been going in the opposite direction. It is in a distribution phase. Now you're in the red zone. You're below the trend line support, and you're below the Kumo cloud. And all the momentum is pointing down from the crash alert buy signal on November the 4th. It's been nothing but downside production ever since. So the system is right on point with the nat gas. As far as the commodity space goes, let me show you how this is affecting the gold miners. Gold miners seem to not be having too much of a problem. It got out of the distribution phase. Now it's in the accumulation phase in the green zone. And from the rally alert buy signal from November the 3rd, you've gotten nothing but upside production. So the miners seem to be liking this right now. They seem to be doing all right. Well, how is all this affecting gold? You take a look at the gold futures here, more upside production today. All right, so the bulls have been keeping this one moving, keeping it pushing. All right, no sign of slowing down just yet. 1800 was the biggest milestone and key resistance for a long time, and now the market is broken out of it and looks like it's trying to run. So that's why I'm showing you. I want to show you the dollar first, and then show you how commodities are responding. But then here's another thing. Silver is acting like the nat gas. How nat gas is diverging from the crude oil. Well, silver is diverging from the gold. You got a crash alert sell signal for tonight into tomorrow's trading. Trend line support is your first stop, but then the next stop is down here at the $23 handle. All right, so you're looking at a possible washout coming here in your silver. Not to mention this bearish pointer from back here. It was fulfilled, but it seems like silver's just having some problems here. This $24 handle is rough. Seems to be a key resistance zone for silver. Last time you got up here, you fell down too. And you are in a green zone. And you are now in the accumulation phase, but just can't get anything going as of yet. Don't know if this is going to pull down gold with it. We'll see. Gold seems to be ignoring what's happening. But now, talking about divergence, OIH, which is the ETF that tracks with your crude oil, look at this. It has a bearish pointer on the day. Earlier this morning, it was down like $3 or almost $4 before rallying into the close, and it's still showing it's under the distribution phase. Even though we had a rally alert buy signal and you finally got some upside production, and the bulls got it on lock now, you're at a crossroads. So this is what's happening. Either the bulls are going to get this thing out of the distribution phase and back to the accumulation phase so they can lock back in with the futures, or this is trying to lead the futures and saying, no, you're at a resistance point now, and the market is about to head back down and test the 210 trend line support. All right. Reason why we bring this example up is because we did have this brief moment back here of a relocking in of the bearish cycle. Even though it doesn't necessarily show up on the chart, this is what the algos were picking up, even though you were still in the distribution zone. So very interesting when you compare the equity side to the commodity future side. All right. Now, as far as Bitcoin goes, GBTC, we've already talked about the gaps that need to be dealt with on the chart, going way back. But right now, the market is sticking with the cash market, the cash side of Bitcoin, and you got this upside production today. We came into today with the rally alert buy signal, and you did get that upside production. How does this fare, though, with Bitcoin overall, you may be asking? Well, let's just take a look and see if we can find more divergences. Well, pulling up Bitcoin here. Bitcoin is also showing some more headway. Had a rally alert buy signal yesterday coming into today. And there you have it. So the market's powering up toward that $70,000 point mark that I talked about previously. And this is going to be a key area. This is a new high. This is a new resistance zone. Psychological resistance will be around that 70,000 mark. You are very much in the green zone, but you were in a distribution phase for a while. Didn't get a lot of traction, though, before the market reversed and gave you this upside production. So just be careful when you're dealing with Bitcoin. Bitcoin is still a very volatile market. All right. And you have to have nerves of steel. You got to use those stops, and you got to be willing to be nimble. All right. You got to be nimble in Bitcoin. Another thing I want to point out is on the Forex side of things, what's going down. All right. So on the Australian dollar, not getting any help from gold. You're in a distribution phase and you're trying to put in a new leg down. And this is looking like it's threatening to crash right through this very narrow Kumo cloud. Now, this 73 handle is where a key support will be in this red zone in this distribution phase. So the shorts are really loving it. The last signal we had was a crash alert sell signal, October 31st. Market's been giving us downside production ever since. Next thing I wanted to show you was the Canadian dollar. Canadian dollar seems to be getting some benefit from the bullishness in the crude oil market. And you can see here the market hit the overhead trend line resistance before pulling back, creating a bullish pointer on the day. Therefore, there's a possibility we could see an upsurge beyond the 125 handle. I think that's coming. I think 25 is going to do it. I think it's going to best the overhead trendline resistance, which will become support, and then possibly take the market up to the 127.50 range. I know, right? 125 to 127. That's a nice 200 plus pip run, and I see it coming. Maybe even a 300 pip. You are in the green zone, and you are in the accumulation phase. So right now, everything is going in the bull's favor from the rally alert buy signal that we had back on October 21st. And the hits keep on coming. The market keeps putting in more upside production. So this is going pretty well according to plan. All right, so that's all I wanted to show you guys. Tell you I'm going to make the video very quick. So with that being said, you know what it is, PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.